Hello everybody and welcome to this very exciting video where we're going to run over Plug Power. This is a follow-up video to the one we recently issued around Bloom Energy, so please make sure you check that one out. However, today it is about Plug Power. The stock ticker is PLUG, the market cap is 9.6 billion, the sector is clean energy, or to be more specific, hydrogen. The share price is $23.06 and they are from the US. So today we will be first running over the products. Then we will move into its vision plus key activities. We will look at some of their strategies for success. We will look at the good and the bad. And finally, we will take and make a comparison with Bloom Energy. So Plug Power compared to Bloom Energy is a more diverse company in the sense that they have a wider range of products. However, the primary purpose of the company is to manufacture hydrogen fuel cell systems for equipments and vehicles powered by electricity. So first, the biggest part that they have is material handling, and what they provide is the GenDrive series fuel cell products, which offers drop-in options for material handling vehicles. So these ones run solely on hydrogen. They also provide engines specifically designed for heavy-duty motive applications and for aerospace and robotics. However, this is a relatively small part of the overall business. And then lastly, which is probably the closest to what Bloom Energy's offer, is the backup power area, which is basically generators that delivers efficient, reliable and environmentally responsible energy for backup power applications. On top of this, they are also heavily starting to invest in green hydrogen solutions. So they both do the production of hydrogen, they do the storage of it, and they can make dispensers that can be used. So this is a relatively small area as of today. We will see that later. However, this is one of their key areas going forward. So Plug Power's vision is in 2024 to have 1.2 billion annual sales, 200 million in operating income, and 250 in adjusted EBITDA. And what is quite interesting is that today in 2020, the annual revenue is only 310 million. So that means a compound annual growth rate of 40%. 2002, the operating income, they're losing minus 55 million. And on the EBITDA, they are losing approximately 10 million. So this means that they have very ambitious growth plans and also a plan to become profitable. What is also interesting is that these targets were recently set up and increased. So previously it was 1 billion on the revenue, now it's 1.2, 170 million to 200 for the operating income, and 200 to 250 million for the EBITDA. So again, really good news coming out from the company by increasing their targets for the future, and something that has had a big influence on the share price, which has increased significantly over the last month, and we will come into that later in the video. So Plug Power has identified 3 core areas to achieve this 2024 vision. One of them is the construction of a Geeker Factory. I guess they have gotten some inspiration for Tesla on this word. And they are currently in discussions with multiple locations to find out where is the best place to put this Geeker Factory. They've already ordered the equipment and the plans to automate the entire facility. And they expect that the cost will be reduced by 50%. As you know, today hydrogen is not financially viable. All the companies are losing money. So if you're able to reduce your cost with 50%, you're definitely on the right track to become profitable. Moreover, they want to increase their foothold in Europe, and they want to expand both within their core markets of material handling, but also in some of the other businesses like on hydrogen and on-road applications. Lastly, the green hydrogen strategy They want to increase their presence and they have huge growth expectations. We will come into that later in the video. And they have recently completed the acquisition of both United Hydrogen and also China ELX to support this strategy. So from a revenue angle, in 2020, they are selling for $310 million and they want to take this all the way up to $1.2 billion. And as we can see here, they expect huge growth both in the material handling, which will be the majority, around $750 million. They want to go into new markets, which will cover $250 million in these different areas here. And the green hydrogen will go from 10 million in 2020 all the way up to 200 million in 2024. So again, huge growth expectation. And if we take a look at the material handling that they want to reach, they have different ways. They have some global channels that they want to apply here. They have the European expansion where there's some well-known companies like Carrefour, IKEA. They want to have some multi-site deals with new customers. We can see they have Honda, GM, Michelin, BMW, so a lot in the automotive industry. And they want to have continued expansion with some of the large American companies like Amazon and Walmart. From a profitability perspective, they want to increase the gross margin and they want to take it to around plus 30% in 2024. And they have identified 3 areas where they believe this can lead to the 30%. One of them is to improve their margin here on the equipment part. They hope that they can do that with higher volume, better leverage of fixed cost and supply chain pricing, vertical integration to increase reliability and reduce cost, innovation leading to simpler design of the fuel cells. They also have the fuel part here, which in 2014 was a minus. It is close to 0 in 2020, and now they want to take it all the way up to around 30%. And that is through hydrogen generation vertical strategy, which will yield improved margins. And then they want to improve their infrastructure design to increase site efficiency and to reduce cost. And lastly, they have the service down here, which was in 2014, where they were doing really poorly. It's still the one performing the worst as of today, but they want to take it really high up in 4 years. And they want to do that by improve the quality of the fuel cell stacks. They want to utilize analytics for predictive maintenance and performance improvement. And they want to leverage labor with cluster of customers in what they call a dispatch model, which I don't know exactly what covers. But what I find interesting overall here is that they will both generate more revenue and they will at the same time use that to drive down cost. So if they can succeed in this, it will be really good and look really good for the future. So we thought it would be good to run over some of the key success criteria to reach the 2024 vision, and one of them is the Geeker Factory. We will not run over all the elements here, but what we think is important to note is that they want to take some of the manufacturing processes from manual to automatic. They want to get economics of scale, basically producing more at lower cost, and they want also to have the state-of-the-art R&D laboratories. So again, really exciting news if they manage to nail this one. They expect that first manufacturing will begin in the middle of 2021. And as mentioned earlier, they believe that they can reduce the fuel cell stack cost with 60% in 2025, and the electrolyzer stack cost will go down from 100% in 2020 all the way down to a little bit above 20%. So a huge decrease and really, really exciting numbers. So as we mentioned in the previous video on Bloom Energy, there has come an increased focus on hydrogen strategy in many parts of the world, and Europe Union is by no means an exception. They're actually the one having the most aggressive strategy, and they want to invest 65 billion by 2030. So there will be massive opportunities for plug power in various areas. And as we mentioned before, Plug Power has a pretty diverse portfolio of offerings. So again, we can see here one area is that they want to have 40 gigawatt of Green Deal electrolyzer. And here is the list of the countries and what the ambition is per country. So Plug Power has identified different ways of how they can put themselves in the best position to expand in Europe. And one way is JV partnerships with EU car manufacturers and EU utility leaders. That was what we saw a bit earlier in the video. Some of the big names like BMW, Mercedes-Benz, etc. Acceleration of their electrolyzer business, and an ambitious key account strategy for material handling, which they obviously want to take up to $750 million. And all this should lead to higher customer satisfaction, speed and growth, and to become best in class. So on the green hydrogen strategy, we can take a look here on how US demand only is expected to grow over the next 10 years. And as we can see, it is expected to multiply by 10 times, primarily within the transportation industry, especially heavy-duty vehicles. Plug Power wants to meet this through the creation of 5 hydrogen plants in the US. Some of them is in the pipeline, others projects have commenced, and as of today they already have one operational. So they also hope that they will expand this to Europe. This hydrogen expansion is done in collaboration with different partners. So most of you will probably know Brookfield Renewable Energy, which is a quite big and diversified company, and they also have with Apex Clean Energy, which is focusing on the wind turbine industry. Lastly, from a refueling station point of view, today Plug Power has 100, and in 2024 they expect to have more than 500, so a 500% growth today. So again, this is another clear illustration of how ambitious Plug Power's strategy is. It's really, it's at least amazing on the paper. So here, just to recap a bit on the building blocks to drive the growth in the future for Plug Power is obviously that the large global markets in US, Europe and also Southeast Asia, although Plug Power does not really have a huge focus on that, will accelerate the hydrogen economy. They also believe that their broad product platform and traction with industry leaders put them in a very good position. They are obviously investing in their capabilities to expand industry and geographic footprints. One of them is the Europe expansion, and obviously on the capabilities that could be the Geeker Factory. And in the end of the day, driving the cost curve through overhead leverage, supply chain and design enhancements, which again is part of the Geeker Factory strategy. So to recap a bit, what is it that we really like about Plug? What are some of the pros that we are seeing? Yeah, but first of all, they are obviously creating products that contribute to zero emissions, which is very much in today. We want to transition into a more cleaner world. They have a diversified product portfolio where they expect all of them will contribute to their growth strategy. They have a very aggressive growth strategy, very ambitious, taking the revenue from 310 million today all the way up to 1.2 billion in 4 years. So remarkable if they manage to achieve this. They have a huge focus on reducing their cost. One of the things that needs to achieve that is the manufacturing or construction of the Geeker Factory. And on the same time, they're very technology driven. So hopefully some of the products can become even better in the future. So until now, this almost sounds like a slam dunk. What can go wrong? They seems to be on the right track to achieve the growth and become profitable. La 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 la. There's definitely also risk. There's also cons with Plug Power, and some of the ones that we are seeing is that they're still not profitable. This company has been around for more than 20 years, and it's only in 1 quarter that they've managed to be profitable. So they don't really have a good track record so far. At the same time, the balance sheet is not that strong and it needs to be able to support a huge growth going forward. What about cost overruns or delay in the Geeker Factory? Is the company used to construct such a big project? Will they be able to manage it? Will they be able to select the right subcontractors to manage it? Who knows? There can be a lot of things that can be postponed, especially considering today's situation with the coronavirus. You never know what's going to happen. In Europe, there's really strong competition in their core market on the material handling. And who says that Plug Power is the one that is going to stick out in the end as the best player? It's again not a guarantee. There can also be competition from the battery on electrical vehicles or other areas which is competing with hydrogen. Maybe the technology improves significantly and they become competitive in the areas where hydrogen today has the advantage. What about on hydrogen itself as a fuel? Traditional fuel is today cheaper, and will the customers really have any incentive to change? So although we really like the strategy and the ambitions of Plug Power, there's definitely no guarantee that they will be successful. And we have a feeling, as you will see in a little bit, that a lot of the expectations seems to already have been built into the share price of the company. So now we have come to the final section where we're going into more details on Plug Power versus Bloom Energy. If you haven't checked out already, please see our top 4 hydrogen stock video, which also includes ballast power and fuel cell energy. However, Plug, since the video, has grown with 41%, while as Bloom Energy has only gone up with 2%. So very surprising on the increase of Plug. We hadn't seen that coming, and we would still say that if you look at the market cap, which is 9.6 billion versus 3.2 billion for Bloom Energy on a revenue of only 260 million compared to 782 million, it is a bit surprising to us. But we think one of the main reasons for this is that Plug Power has put out a more clear path of where they want to be in the future, while as for Bloom Energy, it looks a bit more unclear. There are some signs, however, not as convincing as what Plug has conveyed to the market. So what are the differences between the two companies? Well, Plug Power is already established in hydrogen, while as Bloom Energy is transitioning to hydrogen. They already offer upgrades of the existing energy servers, but they haven't made a hydrogen server, which is the ambition of the company. So you can say Plug Power has already proven in the sense that they can deliver hydrogen products. So Plug Power, broad and diverse product portfolio. Bloom Energy as of today has a very narrow product portfolio focusing solely on the energy server. Fuel cells for industrial users is the main purpose of Plug, while as Bloom Energy focuses a bit more on alternative power grids for companies and cities to have, what can you say, in case there's an outage, they will be able to supply power to the companies, so for example in big data centers. And that's also why Bloom Energy has some large customers like for example Apple. Plug Power, in our opinion, is a little bit more depending on future technology, or at least the construction of the Geeker Factory, while as Bloom Energy is more heavily depending on continuing being subsidized. If they don't get that, it will really hurt their income statement. Plug Power focused mostly on USA and Europe, while as Bloom Energy believes that for them, obviously the US, but Southeast Asia is better, so also a difference here. Plug Power has 20 years of underperformance. As we mentioned, they haven't been able in 20 years except one quarter to be profitable. While as Bloom Energy, although they have not been profitable as well, they have managed in shorter time to deliver more growth. So again, a little bit better tracking record than Plug Power. We would say that Bloom Energy again has provided a slightly different product in the sense that their energy server is mostly run on natural gas. So again, going back to the transition on the hydrogen part. And lastly, what we feel a little bit again is that Plug Power is traded based on future expectation. They have a revenue today of, it's actually 310 million, but we didn't include the Q3 results. And they're still 9.6 billion worth, while as we feel all stocks are based on future expectation. And again, it's about maybe Bloom Energy has not laid out what their vision is, but we still feel that based on this, that they're traded a bit more on the current situation, in the sense that they are only 3.2 billion out of a revenue of almost 800 million. So what is the verdict with these two companies? Well, we think that investing in any of these two companies is still highly speculative, and we would be a bit cautious. For Plug Power, we really like the company. We really like that they have a broad and diverse product portfolio. However, there's no guarantees that their strategy will be successful. There's a lot of risk out there that we feel is not really taken into consideration when we look at the current market cap of the company. They're still only generating 310 million in revenue per year. This was not updated, just to be 100% clear about it. So we feel that you're paying a lot for very little revenue. On BE, the other hand, they have still not managed to transition into hydrogen, and their revenue is very much dependent on subsidies, and if these goes away, this will really hurt the company. And none of the companies have strong balance sheet. So again, there is a risk that they will need to go out and raise more equity, which will dilute shareholder value. This is again something you need to consider when investing in these companies. That being said, compared to where the price is today of the two stocks, we believe that there is more upside in Bloom Energy than there is in Plug. It does not mean that Plug is a worse company, not at all. However, we just feel that the share price is too high compared to what it should be, and we therefore see it as being more realistic that Bloom Energy can grow in the future, at least the short to medium term. This was all we had for today. We really hope you enjoyed this video. Please subscribe for future content. Please give us a like. Please provide a comment. We always appreciate that. Please note that we are not financial advisors professionally. We only do this for entertainment purposes. We hope that we see you again another time. Until then, stay safe and have a very good evening.